Hello investors, welcome back to the channel, your number one place for all your investing needs. So the market is climbing down very rapidly right now. Everything is crashing down, and that is giving us many great buying opportunities. So I'm going to ask you a question. Would you rather be buying your stocks at all-time highs, or would you rather be buying them at a discount price? If you answer discount price, then this video is definitely for you, because I'm going to be going over the top 5 tech stocks that are at a great price right now. Now, these are, in my opinion, great stocks to be buying right now that I'm going to be looking at to buy in my portfolios, and you might be looking at them as well. So you can do your own studies and see if they fit your requirements. Alright, so before we get into the video, go ahead and smash that like button for me. Let's try to get over 100 likes on this video. Leave a comment below. Tell me what stocks you're looking at and what stocks you're buying right now on this dip. And also leave a guess, how many shares of stocks do I own in my portfolios? The first person to guess how many stocks I own in my portfolio, or how many shares of stocks I own in my portfolios, is going to win that $25 Amazon gift card that we talked about once we hit 5,000 subscribers. So good luck, and there is no limit on how many comments you comment. Alright, so before we get into the list real quick, let's just take a look at the Dow Jones right now. It was down 4.55% on Friday. So Dow Jones was trading at about 29,423 points February 13, 2020, and we're down about 10,000 points. Wow. So that is like a 30 something percent drop right there. So we went from 30,000 almost all the way down to 19,000 currently, trading at a low. This is, very bad for the market. I mean, it's just been going down and down. We've lost all of our gains for the past, couple of years. I mean, we're trading right now at, almost 2017 prices pretty much. So we're 3 years back now. But this is a great pullback. We needed this in the market. We needed the market to go down in order to kind of reevaluate and make the stocks worth again, because they were a little bit overvalued. A lot of the companies were, at least. So let's get into the list now. Okay, guys. So the number 5 pick on our list is going to be Broadcom. So Broadcom, ticker symbol AVGO, is an American designer, developer, manufacturer, and global supplier of a wide range of semiconductor and infrastructure software products. Broadcom's product portfolio serves the data center, networking software, broadband wireless, and storage and industrial markets. So Broadcom is down negative 40%. So it was trading at about $317 per share. Now it's trading at $192 per share. Wow, so the stock is down $120 about that much. On Friday it was down about point or 1.15%. So as we can see right here, their PE ratio is 8.81, and they have a dividend yield of 6.76% currently, with a market cap of 76.85 billion. Let's take a look at some of their dividends and some of their key data that they have in here. So first off, their dividend score. As you can see, it's about $3.25 per year. Their dividend yield, let's take a look at this. The 4-year average yield is 2.3%. As you can see, it's been healthily growing. So it's been growing from 1% all the way up to 2 or 3%. And currently it's at a crazy amount right now. What do we say, about 6%? So if we look at the dividend growth for the stock right here, years of growth is 8 years. So if we take a look, it's been growing and growing every year. It was right here, $1.64, $2.52, $4.81, $6.15, and then $11.20 per share. The dividend history, amazing, just keeps on growing. It's had some, years where it's kind of flat or a little bit down, but it just keeps growing. It's about $3.25 quarterly, actually. So that's, let me correct myself. In the beginning of the video, I said $3.25 yearly, but it's quarterly. So that adds up to be about, $12 or something like that. And then their dividend safety, if we take a look right here, payout ratio is about 59.6%. So that's been increasing, actually. It was really low, about 19%, and it's been increasing, as we go, which I don't like to see. I don't like a high, payout ratio on the stocks. I like it to be lower, about 50% or less. So this actually fits my criteria. But that is Broadcom, our first stock that we're gonna, discuss right there. I feel like it's down a pretty decent amount, and that once everything is settled back, it might be a good opportunity for me to add this to my portfolio. Alright guys, so the number 4 pick on our list is going to be Advanced Micro Devices, ticker symbol AMD. So this is a multinational semiconductor company that develops computer processors and related technologies for businesses and consumer markets. So currently AMD is trading at $39.61. It was down about 0.5% on Friday, which is not bad compared to some of the other tech stocks. So since this has started, it was trading at a high of about $59 on February 19th, and currently it's trading at $39 like we just said. So it is down 32% in the past, month pretty much. That's a big down, but if you take a look at it, it's 5 year actually. This stock was trading at about $1 or $2, and it's just been growing and growing, and it's had some healthy pullbacks, on its own right there in 2018. This was actually when the market, I believe, crashed in December, and then it's been, climbing back on up. So this is what, my theory is that just like here, where the market pulled back from about $33 down to about $20 after everything was settled, it started climbing back on up and beating that price. It reached that price in a couple of months, and then it just exploded on up at an even higher rate. So that's something that I look at, and I think that this stock is definitely great. I mean, their market cap is 46.33 billion, and they have a lot of things coming, a lot of chips that they produce chips, and they're one of the top ones in the field. AMD, amazing company. They have very good growth, and everything surrounding them is amazing. If you would have bought 5 or 6 years ago, you would be making huge money when it was very cheap right here, a few dollars per share. So AMD, definitely another one that I'm keeping on my list, and it's actually one of the stocks in my portfolio that is still in the green. I mean, I bought it at such a low price that I'm still actually up on that position and not down like the rest of the market. All right, guys, the number 3 stock on our list is going to be Intel Corporation, ticker symbol INTC. So this is an American multinational corporation and technology company. So they're trading currently at $45.83. They're down about 0.24% on Friday, which again isn't that bad compared to the market. It was down about 5% on Friday. They were trading at about a high of around $68 per share, and then about, let's just say $65, $67 in February, and now they're at $45. So this stock is down 31%. As you can see, your pattern, these tech stocks are down about 30% average. Their PE ratio is 9.32, which is very low. They have a dividend of 2.88%, which is nice in my opinion, and a market cap of 196 billion. If we take a look at their dividends, right here, 0.33 cents per quarter. Their dividend yield, 4-year average yield, is about 2.7%. So their dividend, it's been up and down, but it's stayed around pretty much about that 2 or 3%, area. If we look at their dividend growth, years of growth, 17 years. Wow, they've even had a stock split a couple times right here in the past. But their dividend, it's been increasing right here, as we can see, for 17 years of, dividend growth, which is a good thing. Their dividend history, once again, it's been steadily increasing their dividend or staying, at the same price, but it has not dropped, which is an amazing thing to see. And currently it's at about 33 cents per quarter. So payout ratio, 26.8%, very nice. I like to see it way under 50%, but closer to the 20 to 30%. It was, at actually about 50% or even higher at one point, but it's been steadily climbing down, which is good. That means that they're not having to dig into their profits to pay out the investors, for their dividends, and that they have plenty of revenue coming into this, stock that's being able to pay out the investors in dividends. So obviously, this is another one that I'm going to be taking a look at once this all flattens out. That I might be grabbing on the dip. I think that a value on it is very nice, even though I believe that the tech market has not actually been hit as hard as some of the other markets have. I mean, look at the airline industries; they're down like 70-80%. Also, the casinos and all those other companies, very, very low. All right, guys, the number 2 pick is going to be Nvidia Corporation, ticker symbol NVDA. So this is an American technology company. It designs graphics processing units for the gaming and professional markets, as well as systems and chip units for the mobile computing and automotive markets. So Nvidia was trading at a high of about $294 in February. Currently it's trading at $205, so it's down about $90 per share, and it's down actually negative 34%. So 34% down. It was down about 3.39% on Friday. Now, one thing I want to mention is take a look at this. So 2018, remember when we had that market drop around December? Well, it was trading about $270 per share. It went all the way down in January at around $133 per share. Now, obviously, this is when everything started to flatten back out and continue to grow up. So it went from about $150, let's say, and then it kept growing. And obviously, it took a few months. But look, it went all the way up here to even higher highs, and kind of destroyed it again. So that's actually what I'm actually hoping for again in the pattern. I mean, obviously, you can see in the past 5 years it's been going up. So I'm hoping that just like here where we had this crash in 2018, closer to the end of 2019, I'm hoping like right here, we go down. And obviously, once everything flattens out, we're going to continue to go back up and, destroy those highs again in a year or 2 years from now, or you might take even longer. But, these are long-term growth stocks that I believe in. So their PE ratio is 26.95, a little bit on the high side. They actually have a dividend of 0.31% with a market cap of 125.92 billion. If we take a look at their dividend, it's about 16 cents per quarter. Their dividend yield is right here. Their dividend growth, it's been growing for 7 years. It's a very low dividend, but still they have some type of dividend. So I guess it's, better than nothing. That's just an extra bonus pretty much you can take a look at, because this is not a stock you would be buying for the dividend. You would be buying it for the growth of it. But it's been increasing, which is a positive thing. Their payout ratio is 8.38%, very low. This is something, that really actually attracts me, because that means they don't have to take, so much out of their revenue and their, money that they're actually making from their growth and all. They're only paying out about 8% of it, which is amazing. That means they have plenty of money. The company, they can definitely pay out all the investors. So this is another stock that I'm going to be taking a look at in my portfolio to add once everything flattens out and, picks back up. All right, so we're finally here. The number one stock that I'm going to be looking at in the tech sector is going to be Microsoft, ticker symbol MSFT. This is an American multinational technology company that develops, manufactures, licenses, supports, and sells computer software, consumer electronics, personal computers, and related services. So Microsoft was trading at a high of about, let's see, right here, it was around 185. Actually, it was about $190 because I was actually buying some call options for March 20th, 2020, which totally did not make it in the money, and I lost some money on this trade. But it was trading at about $190 high. It's pulled back down to about $137.35 right now, down negative 3.76% on Friday. So this stock is down negative 26% in the past month. So as you can see, all the tech stocks that I mentioned in this video were down about 30% so far, in the past month. If we look at their PE ratio, is 24, so it's about, a decent PE ratio. Dividend yield of 1.49%, which, this is not a dividend, yielding stock that you would be looking for dividends. This is a growth stock. Market cap is still above 1 trillion, which is, still good. They've taken a huge pullback and they're still above that 1 trillion market cap. Microsoft, I mean, take a look here. 2015, it was trading at $47, $42, and it's just been growing and growing. So this dip doesn't even look that bad for Microsoft. And that is something that I love about Microsoft, that even with this huge dip in the market, Microsoft is still up a lot. And actually, I'm still a little bit above my average buy price in the portfolio for Microsoft. I think I'm literally at the break-even price right now, even with this huge 26% drop in the market of it. So this is a reason why I love Microsoft, especially with the whole Jedi contract that's still going on against Amazon, and now it's kind of been halted. Nobody's really talking about it right now. That's what was being talked about right here at the highs, but now I haven't really seen any news on it. But if we take a look at their dividend, 51 cents per quarter. Their dividend yield is actually, about almost 2% average. It was a little bit higher and it's been going down a little bit, which is okay. Dividend growth, 16 years of growth. It's been increasing every year. Amazing, almost $2 per share right now. Their dividend history, obviously, it's been increasing steadily or staying the same. Their dividend safety, payout ratio, about 36%, which is like in the middle. It's not, good, or it's not too bad. It's kind of in the middle, something I like to see. But Microsoft, definitely one that I'm going to be adding even more shares. I mean, if it goes below $130 per share, I'm definitely going to buy more, because that's going to be below my buy price. I believe my buy price was around $135 or $136 per share. but Microsoft is definitely a stock that I love holding in my portfolio and something that I would definitely be willing to buy more of. So yeah, guys, these are all the stocks that I'm going to be taking a look at in the tech sector. Now, this doesn't mean that I'm going to be buying all of these once the market starts to trend up, but I will be taking a look at some of these and adding some of them, especially, Nvidia, Microsoft. Those are ones that I really enjoy looking at. Even AMD, I have those in my portfolio right now, actually. So, I would definitely love to add some more. Obviously, before you trade, guys, make sure you do your own studies, make sure you do your own research. Don't buy stocks based on somebody else's opinion. Do your own research, and I'm not a financial advisor, so you're trading at your own risk. If you enjoyed this video, make sure you smash that like button for me. Subscribe to the channel for more videos like this. I might do a video on all the sectors, top stocks to buy right now that I'm looking at for my portfolio personally. This is not financial advice, obviously. So yeah, I hope you guys enjoyed, and leave a comment below how many shares do I own in my portfolios in order to win that giveaway.